Hi and welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video, we're going to be discovering the gold volume profile levels. We're going to be identifying these levels because gold has recently traded through a key level of support. So I want to just highlight where gold prices could be heading to next and why have we seen this recent downward turn in gold. So we saw price come up into this 1944 area. We're actually discussing this when we were doing our live streams a couple of weeks ago, and we were basically looking to see what happened if price came up into this previous level of resistance ahead of that FOMC meeting. Now what we actually had was gold rallied into that area of resistance, it rejected and then continued to push to the downside. And what I've done is I've actually highlighted a volume profile level through there. So if I actually just zoom in on this area through here, this was the level that we pointed out. It was around about the 1944 or 1945 dollar area on gold. And the reason why we highlighted this is because there was a period of consolidation, and you can see between August the 30th and the 4th of September, price just went sideways. It continued to fail above that $1945 area, and then sellers obviously won out of that period of consolidation because we can see price fell from around about that 1945 down to around about $1900. What we then saw was price came back. We traded through a key level of support, which was this trend line that ran down through here. We were expecting price, because it broke out of this area, to potentially continue to the upside, but we did say that this 1945 area is going to be a barrier. We would only be looking to see if longs continue above this $1945 point, and it didn't. Okay, we had a strong rejection. So what that tells us is that sellers that were selling around this point before, you can see the point of control is there as well, which is the most traded level within that period of time. They added to their short positions, okay, because they were short already. Price dropped to that $1900 level. It came back. They saw another opportunity to take another short sell opportunity into gold, and gold is now trading all the way down into 1863s. We've also broken down through this area of support as well, which was the 1885. Now, just to show you an example of where volume profile can be really good, I've also highlighted this period of consolidation back here, which started on the 14th of August and ended on the 23rd of August. What you'll notice at that point is that the point of control was trading around about 1904 spot $18. On the 25th of August, price came right down into that level, had a bullish reaction, traded higher. We then revisited that level, and buyers were still willing to push price higher at that point. And you can see price then rallied into that 1945 level. Now that we're below these lows, though, I want to be looking at volume again. I want to see where the potential levels are of interest now for those traders. And what I've marked out is a level down around about 1836. The reason why I've come to that conclusion is because, again, highlighting the volume profile tool here, there is a period of consolidation between the 6th of February and the 13th of March of this year. And within that period, the most traded level is 1836. You can see it via the point of control there. So sellers, what they try and do, or buyers as well, they try and push prices into those key areas of volume, and that's what I'm looking at here. Can sellers now drive price into 1936, even the 1815 level, which you can see are these lows that created back on the 27th of February and the 8th of March. So that could be the level where price heads towards next. Now, the reason behind this is because the dollar is strong at the moment. There's a lot of demand for the US dollar, considering the fact that the dollar index has climbed above key yearly highs. We've also seen this hawkish tone from the Federal Reserve as well, and a lot of people in the US still have lots of money. It's different in terms of compared to Europe and whatnot. There were some interesting charts that I saw most recently talking about the interest rates and how that's affecting the mortgage market in the US. So now a lot of people are fixed to 10 to 30 years in the US, whereas in the likes of the UK, for instance, people are fixed more to like 2 to 5, maybe even the max of 7-year mortgages. So interest rates are going to affect people more in the UK than they are in the US. So they're not seeing that in the market at the moment in the US. So there's still lots of money that could be used to buy things and then create that sort of demand. And that's what I think the Fed are fearing at the moment. That's why I think they've remained fairly hawkish in their tone, and that we probably will see maybe even another hike to come in the future, or at least they will hold rates at a higher rate for longer. That could force gold prices to push lower if that demand for the US dollar does remain. So we could be looking for that as an option for sellers to target that $18.36 level. Obviously, if you were looking for opportunities, then you want to be looking to see where those lower high forms now that we're below that $18.86 support. Thanks for watching this video update. Really hope you enjoyed it. If you did, please leave this video a thumbs up, subscribe to our YouTube channel to see some more forex trading content, and I'll speak to you in the next video.